We are here on Wednesday, February 4th, recording about new and some old things that are going on in DC and with policy that affects agricultural producers. Welcome to Compeer's Ag Edge, brought to you by Compeer Financial. In each episode, we break down complex agricultural economics, policy dynamics, and farm business topics into conversations that make sense for your operation. We're here to help you stay informed and confident about the trends and decisions affecting your agricultural business. I'm Megan Roberts, agricultural economist at Compeer Financial, and I am joined today by Ben Duncanson with Legislative Affairs, also at Compeer Financial, and another guest, a new guest to the DC Update, Cole Patrick, Director of Insurance Product Support, also with Compeer Financial. So with that, I'm going to hand it first over to Ben, who has, I think, a short amount to share about a lot of things that are happening in DC.
Yeah, thanks, Megan. And good things these is a time-stamped because just moments ago, President Trump signed an appropriations package that was passed by the House yesterday that will keep a majority of the government funded through the end of the fiscal year. Now, I say a majority of the government because there's still an impasse over the DHS funding. That's Department of Homeland Security. Given some of the events that has happened in Minneapolis over the last couple of weeks, there is some additional provisions that the Democrats are looking to add to that over the next couple of weeks. So that one of 12 appropriations is actually only extended for another 2 weeks' time. A lot of folks are thinking it'll probably take them a little bit longer than that. So we'll see if they're able to come to a conclusion of that within the 2-week time frame, or whether they'll need to extend again, or whether they won't and will face the third government shutdown or partial government shutdown, in this case, of this Congress as well. So as all things continue to move forward in Washington, D.C., one other big thing to note, as part of this appropriations process, the Senate was in last week and the House came back to reopen the government this week. But as part of the previous package that had made its way through the House, not the one that was passed, but a previous consideration, there was an attempt by members of the Rules Committee from the Midwest to include a provision in this appropriations package that would allow for E15 sales year-round. Given some of the negotiations around all things appropriations, these are usually very complex vehicles with a lot of changes in it. They ended up not including E15 year-round as part of that appropriations package, but did dictate that a study will be conducted to see what the implications of E15 year-round would be. So we will continue to watch that. It was interesting because last week, during a visit to Iowa, President Trump did signal his support for the inclusion of E15 year-round. So given that it has a broad base of bipartisan support, and the president seems to be on board as well, we'll see how that continues to progress as Congress continues its business as part of its second session. On a related note, E15 was under consideration as part of this Farm Bill cycle, Farm Bill 2.0. Cole will talk a little bit about some of the things that changed as part of the One Big Beautiful Bill at the tail end of last year. But as we think about Farm Bill 2.0, we have had a little bit of an update on this on the House side, at least. G.T. Thompson has signaled that he will begin marking up his legislative text on February 23rd. However, for all of you big DC nerds out there with your calendars, you will notice that is also the State of the Union, which usually takes a little bit of floor time and member attention as well. So we'll see if that date slips, or most likely the markup will happen over a course of several days. So we're very happy that a lot of things that we have been working for within the farm credit system are hopefully going to be included in the base text of this farm bill. So we're very grateful to our partners out there as well. And as I mentioned, as part of the E15 consideration under the Rules Committee, big shout out to Michelle Fishbach, who was one of those Midwestern members that did try to get that E15 language included as part of the appropriations package as well. Speaking of other things related to feedstocks and renewable fuels, we did get updated guidance from EPA and Treasury this week on the 45Z tax credit. This is good news to a lot of folks out there because many of the changes that were made under this administration will be much more beneficial towards domestically produced feedstocks, which will hopefully help us get through some of that large inventory of beans that we see on the global front. So again, good changes there, allowing for not only U.S. but North American feedstocks, and also a little bit more flexibility when it comes to the carbon scoring that goes along with this as well, making it a little bit easier for farmers to not only document but meet those criteria that's laid out. This is under a 60-day comment period, so we do have another period of folks being able to comment and suggest additional changes to that, but we very much see this as a positive signal moving forward. So we'll continue to keep an eye on that as the administration continues to work on it. But all in all, those have been the couple things that have been happening in Washington, D.C., with much more to come. Cole, I know you wanted to talk a little bit about some of the things from the insurance front that was included as part of the One Big Beautiful Bill at the tail end of last year. Why don't you go into that and explain to folks how that may actually benefit a lot of our customers out there as well?
Yeah, thanks, Ben. Plainly put, the One Big Beautiful Bill gave quite a nice platter on the table for crop insurance takers out there, our producers that we love to serve day in and day out. The One Big Beautiful Bill upped the subsidies for SCO and ECO, namely. That's the big thing that everybody's got their eye on. It did some other things with the Title I programs, ARC and PLC, but going back to ECO, SCO, the subsidies going up to 80%. Just flashing back to 2025, those premiums are 43% cheaper than they were. Okay, and that's on top of the additional general unit structure premium subsidy increases that they gave across the board, which is about the tune of 3%. So on top of that, RMA is going through a rating cycle here in tandem with those changes to reduce the rates of corn, particularly this year across the Midwest, namely Illinois. Minnesota and Wisconsin will see a little bit of that too. Next year on that cycle, I think, will be soybeans. So we are seeing a dramatic decrease in premium. So we all know that the cost of production is going up, but the great news for producers out of the legislation here is that the cost to protect those crops is going down, which is a huge upside for the financial margins of these producers. Outside the federal subsidized products, with the Title I program, we saw a big lift in funding for ARC and PLC, and that would be the agricultural risk coverage and the price loss coverage through FSA. And what we saw there was a lot of money poured in to lift reference prices. And as it stands today for 2025, a lot of producers are going to be in the money. Another benefit to that is through the One Big Beautiful Bill Act, producers are going to automatically receive the higher of one of those payments. Although they did make a choice before the bill came out, the legislation said, you know what, we're going to give you the higher of those payments. So that's out of sight, out of mind. Compeer, we have the tools in-house to calculate, what that will be so we can give expectations on what that is. Projecting forward to 2026, through those programs, you will have to sign up and select ARC or PLC. But the good news is that you will not have to choose between taking ARC and what's a supplemental area product called SCO. Historically, you would have to choose between ARC and SCO because the coverages mirrored each other. But now that ARC goes up to a 90% coverage level, they don't mirror each other anymore, so you can choose both if you want to. More on that is the FSA has had so much thrown at them here, be it through administering SDRP Phase 1, Phase 2, Farmer Bridge Assistance, updating base acres, and all these things have got their plate pretty full. So in reaction to that, they've said, we're going to delay the sign-up for ARC and PLC. And I've even heard news that we might even know our 26 yields before we have to do that sign up, which is super favorable to Compeer customers, particularly because, again, like I mentioned before, we have those tools to calculate exactly what those losses are. And especially if we know the yields, we can make a pretty good, accurate determination of which one they need to choose, if not the one they need to choose. So a lot of good news to look forward to on the horizon with these Title I programs for producers. But as we close out on sales closing here, we got around 40 days left, so the sprint is on to lock in those coverages. I encourage everybody to take a hard look at ECO and SCO because those savings are on the table and people need to take advantage of them. Some things that we are doing here in-house in the month of February is tracking that spring price, which sets all the premiums and the guarantees for these crop insurance contracts. So as we sit today, we are 3 days into our tracking, and prices are looking a little bit lower than they were last year, at least on corn. Beans is a little bit above. Megan, I suspect you'll kind of get into that a little bit as we move forward. But at the end of February, we will know what those prices are. We will know what the premiums are. And in tandem with that, we are hosting a Compeer webinar to talk about weather and risk. We'll have one of our partners from Nutrien come in and talk about weather, and we'll tail that with risk management solutions. So stay tuned. I encourage everybody to sign up for that, get your producer signed up for that, and we can give everybody some last-minute information to maybe push them over the edge or inform them for what we could see ahead. So crop insurance has been really busy, to say the least.
Yeah, it's always busy in February and early March, that sprint towards the March 15th deadline. It is a little interesting this year to not have that ARC and PLC sign up at the same time. Last year, we got that extra month. This year, it's looking like we'll have some indefinite amount of time, but certainly still decisions to be made on the crop insurance side. As Cole mentioned, we have had a little bit of some soybean benefit already in these first couple days of February. Particularly today, on the day that we're recording, there was a very marked increase in soybean futures prices, and that had to do with a tweet, or I don't know what the official thing to call it, post about a phone call that happened with President Trump and President Xi of China regarding a variety of things. But the thing that was of interest to the soybean market was speculation that the 12 million metric tons that was agreed to earlier in 2025 for export to China may increase to 20 million metric tons. And so just today, I was looking at March soybeans, for example. We started out the day at 1066. We went as high as 1115. 355,000 soybean contracts were traded today. If we look at May, they went even higher. 1079 per bushel was our opening and went as high as 1127. That's a 48-cent spread if you're keeping track at home. Now, they didn't close quite that high, so they did pull back a little bit, but certainly small amounts of news, when it is very hopeful news about trade to China, can have some really big market reactions. And this is kind of one of the bigger market movers, at least in my opinion. I don't know, Cole or Ben, you can disagree with me, but it's really been one of the bigger market movers for soybeans since all the way back in October when we had the first announcement of the agreement for 12 million metric tons. So a little bit surprising to me today, at least. Any of you guys have strong thoughts on market movements today?
Yeah, I think a lot of people are kind of playing Trump's tweets day by day, right? I think he plays a careful game to do these things, maybe a little bit on a calculated way, maybe more than most think. Yeah, I was very positive. We need those bushels going out, especially to counteract some of the production that's going to hit the supply side of things from South America. So that's kind of the yin and yang, the pole. We hope that we can continue to see relief on the tariffs for, U.S., Mexico, Canada, especially on the imports and exports side of things. Hopefully those things in tandem with some SAF renewable fuels legislation could give us some positive uplifting, things for the markets. So all things that producers are going to need this year.
Yeah. So if we think back to where some of the challenges in the January World Agricultural Supply and Demand estimates, the WASDE for soybeans, it was on the export side. And so needing additional exports for soybeans is really key. The challenge to this is, as Cole just mentioned, South America right now, they're rolling combines. There's a lot of product from South America. And anytime we have these market movers that increase our price of soybeans here, while that is encouraging for trade to China, it makes our soybeans more expensive to trade to other countries. So there's this push-pull if you want prices to go up and you want more trade to China, but then that makes it more difficult to trade to other countries. And we've seen that dynamic in some of the most recent WASDs. We saw that in the November WASD. We saw it in the January WASD. So it'll be interesting to see what happens in the February WASD. Also interesting to see what happens in the February WASD for corn. The January WASD was a really bearish report for corn with that 17 billion bushel production number. And so as we move into February, that's not a report that tends to have a lot of excitement in it. But we've had really strong exports. If soybeans are having languishing exports, corn has been the opposite story. At least we've got some really great exports there. And it's going to be interesting to see if there's any changes there on the corn side for the February WASD. Something that wouldn't need exports would be to circle all the way back to where we began with Ben, and it's that E15. So if we're not moving product out of the country to increase prices, it's really about what can we do domestically. And E15 on the corn side is one of the, very heightened conversations that's happening right now. And it is because there are estimates that as much as 2.6 billion bushels of corn could be used domestically with that increase to E15. Now, those are estimates, and economists were not always right with estimates, but that is something that has been projected as a domestic use for corn. Nonetheless, even with some of these encouraging uplifts in the market like soybeans had today, we're still certainly in a challenging time for corn and soybean economics. And so we'll have to wait and see what happens next. I'm going to make, though, a really hard left turn away from agriculture over to a different supply and demand estimate, and it's going to be the monetary supply of money. And that was a really hard left turn. I really am stretching the link there. But let's talk about the Fed. The Federal Reserve met last week, and they did not make any changes at their meeting, and that's not a surprise. That was really something that was expected as we headed into that meeting. It was very small chance that they were going to make a change to the Fed funds rate. They did not. And as we move forward for the next Fed meeting, again, not a lot of hope that there would be a movement down in the Fed funds rate. And at this point, interest rates on the consumer market are hanging out. There's some small fluctuations, but not a lot of movement there. So when it comes to news on the Federal Reserve, it is less about interest rates right now and more about some changes in personnel. So on Friday of last week, we did have the long-awaited announcement of the next nominee to be the Fed chair. President Trump announced that he is going to nominate Kevin Warsh. And Kevin Warsh is a former Federal Open Market Committee member. He is a former governor of the Federal Reserve. He served a while ago, so he has been away from the Federal Reserve for a number of years, but he did serve from 2006 to 2011 and is considered someone with really deep experience in monetary policy. And really the reaction to this nominee was pretty well received. And so it's going to be interesting to see as this nomination moves forward, just how it progresses. This is something that does need to be confirmed by the Senate. And if he was confirmed, he could move into the governor role and would fill a position that is currently being held by Stephen Myron. But for now, we'll have to kind of wait and see. The chair position is not open until post the Fed May meeting. So we've got several months until the chair transition would happen if Kevin Warsh is confirmed in his nomination. So that was really the big news when it came to the Federal Reserve, not really their monetary policy choices, but what is going on with personnel. We also just got news yesterday that Stephen Myron is planning to stay on. His term expired January 31st, but he can stay on indefinitely until the next nominee comes in. So interesting things going on there, but not so much with actual rates.
And it's a good thing that we have a little bit of a long timeline there, because getting him through the Senate may be a little bit of a challenge, not only due to timing with floor time, but due to a hold that Senator Tillis has put on any nominations for the Federal Reserve until the situation between the administration and current Fed chairman is sorted out. So we'll continue to see this going forward, but having a long timeline for that replacement may be suitable. And as Megan said, this pick was fairly good to the market. Would note that Mr. Welsh has very good ties to Wall Street and was Ben Bernanke's right-hand man when it comes to the 2008 financial crisis and communications between the Fed and Wall Street as well. So,
Correct.
Again, highly respected by a lot of folks out there, so we'll continue to watch his confirmation process move forward over the next couple weeks or months.
Yeah, if you look at that time that he served as a Fed governor, 2006 to 2011, he served as the liaison, quote unquote, to Wall Street during the housing crisis. So that is something that folks remember, and it was something that was definitely mentioned quite a bit on Friday when it became clear that he was the nominee, just that long-term history. So the Federal Reserve is something that likes history, it likes tradition, it likes to be independent. A good, independent, drama-free Fed is generally good for markets. So we'll have to wait and see what happens. And with that, I think we have covered the topics that we wanted to hit today. A lot going on. We haven't covered everything because there's so many things to cover, but we'll be back in a month to talk about more DC happenings. We don't know what it will be, but it will definitely be something.
And just one more thing to mark your calendar, folks. Not only our next episode, but just a little bit of reminder out there that more information about those bridge assistance payments to farmers will go out at the end of February. So we'll probably not be with you before that happens, but just want to make sure that that's on everybody's radar as well. So be looking for another form in your mailbox sometime soon.
Yeah, February 28th is that deadline, and we won't be back before then. So we'll see you after that.
Thanks, everybody, and talk to you in a month's time.
Thank you for listening to Compeer's Ag Edge. You can follow us on Apple Podcasts, Spotify, or your favorite podcast app. For more agricultural finance insights and resources, visit Compeer.com. That's COMPEER.com. Until next time.